What is going on? Welcome back to the channel. So today we're going to talk to you about TeraWulf. They just dropped their earnings. I'm going to go over some of the key highlights from the earnings that you need to kind of take away from all of it, support and resistance points, and what analysts are saying. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So Friday did go up 16.07%, sitting at $4.19. Over the last 1 year, up 99.52%. Over the last 6 months, pretty much flat for the most part. Earnings though, very interesting because it did go up so much. Like, it didn't actually hit on the earnings per share or the revenue. Revenue did miss by 2.45 million, but they did give relatively good future guidance, so I'm going to go over that near the end of the video. As far as this, the implied move going into the earnings was 14.25%, so definitely a lot more volatile than what wasn't previously anticipated. But I think in general, there wasn't that much expectations for their earnings. And you can see that based on the 2 week, 1 week, 3 day, and 1 day leading into the earnings, all red. And historically speaking, they did miss on roughly around 70% of their previous earnings. So again, I think the expectations were fairly low, so that kind of worked out in favor of it. Aside from that though, with the options being done on Friday, there's a good consensus for it to be above roughly around that $4.50 to $5 range. And then the bears are anticipating for it to be sub 4 for the most part, going into at least the next couple weeks. Shorts on Friday did return 287,000 shares. 26.9% of the free float is being shorted. Works out to be 76.41 million shares. Cost to borrow minimum is negative, so you are seeing some signs of manipulation. So that does mean that there is a broker out there physically paying people to short this stock. Leading into the earnings, you did have shorts really increasing. So looks like the low in October, for instance, was like 14%. So they've definitely been doubling down, and them having this spike up leading into the earnings does lead me to believe that they felt that the earnings was going to be a miss. So I definitely did catch shorts off guard with it at $4.19, right below this S1. That's where it did close. $4.20 is going to be that key pivot that you really want to watch for it to get above early on this upcoming week. Flip side, $3.53 is going to be that next strong support. And then 529, 638 is going to be the next strong target / resistance. Only one analyst rating did come out. That was a $9 buy by Roth MKM, and analyst doesn't show the analyst rating for this one, but yeah, $9 is pretty good given the fact that it's at $4 and change. As a consensus of all the recent ratings, $9.64 is that price target, representing 130.07% upside. So definitely interesting. I would have anticipated more ratings coming out, but most likely that'll come probably this upcoming week, because normally there should be another about 5 at least giving ratings. So let me know your general thoughts. Do you own it, sell it? What have you been doing with it? With that all said, don't forget to hit that thumbs up, and then as well, let's get right to the future guidance and some of the absolute key takeaways from their earnings.
TeraWulf targets 200 to 250 megawatt HPC capacity by 2026, while securing $1 billion Core 42 contract. Earnings call insights. TeraWulf Inc. Wolf Q4 2024 management view. CEO Paul Prager stated that 2024 was a transformational year for TeraWulf, highlighting the doubling of revenue and adjusted EBITDA year over year, driven by higher Bitcoin production and favorable pricing. He emphasized the company's strategic shift towards high-performance computing, HPC hosting, with the execution of a 10-year, 72.5 megawatt data center lease agreement with Core 42, valued at over $1 billion in revenue. The company achieved a hash rate of 9.7 exahash per second by year-end 2024 and expects to increase this to 13.1 exahash per second upon full deployment of new S21 Pro miners. CFO Patrick Fleury detailed financial improvements, noting a 29% quarter-over-quarter growth in GAAP revenue to $35 million in Q4. He also mentioned a 24% decrease in self-mined Bitcoin volume due to planned outages and miner refresh programs. The average value per Bitcoin mined increased significantly to $82,739 from $61,075 in Q3. Other key developments included the restructuring of the Lake Mariner ground lease, securing infrastructure capacity for up to 750 megawatt men, and the initiation of the 𝗖𝗎𝗧𝗛 site, which is expected to add 150 megawatts of capacity by 2026. Outlook. Management reaffirmed its focus on scaling HPC hosting, aiming to contract and deploy 100 to 150 megawatts of capacity annually over the next 3 years. Paul Prager outlined plans to exit 2026 with 200 to 250 megawatts of revenue-generating HPC capacity. The company expects significant revenue growth from its initial Core 42 agreement, which will generate $100 million annually over the 10-year term. Additional contracts for HPC hosting could add $140 million to $210 million in annual revenue. Discussions with Core 42 regarding additional power options, exercisable through March 31, 2025, are ongoing. Management anticipates providing detailed 2025 guidance soon. Financial results. GAAP revenue for Q4 2024 was $35 million, a 29% increase from $27.1 million in Q3. Year over year, GAAP revenue rose by 102% to $140.1 million. Operating expenses increased 69% quarter over quarter to $2.7 million, driven by staffing expansions for mining and HPC activities. SG&A expenses rose significantly to $32.3 million in Q4, primarily due to stock-based compensation. Adjusted EBITDA for Q4 was $2.5 million, down from $6.3 million in Q3, while annual adjusted EBITDA more than doubled year over year to $60.4 million. The company ended 2024 with $274 million in cash and total assets of $787 million. Q&A. Nick Giles, B. Riley Securities, asked about the economic positioning of the Lake Mariner site and its suitability for inference workloads. Paul Prager responded that the site was fully contracted and capable of meeting both training and inference demands. Mike Grondal, Northland Securities, inquired about marketing efforts for the remaining 250 megawatts at Lake Mariner. Prager confirmed discussions with potential customers for long-term scalable needs. 𝗪𝗓𝗡𝗘𝗖𝗧, Roth Capital, sought updates on the Core 42 agreement and contingency plans if additional capacity is not exercised. Prager noted ongoing dialogues with other high-quality counterparties. Kevin Cassidy, Rosenblatt Securities, questioned the impact of Bitcoin price declines on mining operations and the deployment timeline for new miners. Prager stated that the company's focus remains on transitioning to HPC hosting rather than Bitcoin mining. Sentiment analysis. Analysts expressed cautious optimism, focusing on the progress in HPC hosting and the scalability of the Lake Mariner and 𝗖𝗎𝗪𝗧 sites. Questions highlighted concerns about power costs, customer contracts, and market demand. Management maintained a confident tone, emphasizing strategic shifts and scalability advantages. During the Q&A, Paul Prager frequently highlighted the company's readiness to meet customer demands and its long-term vision for HPC hosting. Compared to the previous quarter, the tone of analysts was more focused on contract execution and market positioning, while management demonstrated increased confidence in its transition strategy, quarter-over-quarter comparison. Guidance language shifted to emphasize HPC hosting, with specific targets for annual capacity deployment and revenue growth. The previous quarter focused more on Bitcoin mining efficiency and financial realignment. Management confidence increased, driven by the Core 42 agreement and other strategic advances. Analysts' tone reflected heightened interest in the company's ability to execute on its HPC ambitions. Financial metrics showed improved revenue and adjusted EBITDA year over year. Operating expenses and SG&A costs rose significantly, reflecting investments in scaling operations. Risks and concerns. Management cited challenges such as elevated power prices and record network difficulty impacting Bitcoin mining operations. Mitigation strategies include transitioning to HPC hosting and optimizing fleet efficiency. Analysts raised concerns about dependency on Core 42 for initial HPC hosting revenue and the timeline for additional site integrations, such as 𝗖𝗎𝗪𝗧𝗛. The company's ability to secure additional customer contracts and project financing remains a critical factor for future growth. Final takeaway. TeraWulf's Q4 2024 earnings call highlighted its strategic pivot towards high-performance computing hosting, with a focus on scaling operations at Lake Mariner and integrating the 𝗖𝗎𝗪𝗧𝗛 site. the $1 billion Core 42 agreement underscores the company's ability to attract high-quality customers, while plans to contract additional HPC capacity position it for long-term growth. However, rising operating costs and the dependency on contract execution remain key areas for investor attention.